My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions and ETS Tax Relief. And we specialize in tax, and we are tax geeks over here. Okay, so I want to talk about Beyonce ending up in tax court. So that is all over the interwebs this morning. It came out yesterday, as far as I know, and I spent the night reading over this, and so this case brings some fabulous lessons, and so I want to talk about it. Okay, so let's talk about the process. How did she actually end up going to tax court? So she filed her returns. Number one, still always file your returns. Number two, then she got audited. Okay, there was something that happened that caused the IRS to pull her return for exam. Okay, and then number three, when they pulled her exam, they said, okay, we have questions about A, B, C, D. And then they are going to require you to send documentation. Now, if you don't send the documentation, then they're going to disallow the expenses. And then so that's what happened so far. And so then you can go to appeals. And then if you lose on appeals, then you go to tax court. So that is the short way synopsis of how this whole tax court thing came to be. So I think if nothing else, this case will help our taxpayers, our clients as tax professionals, see why we are the way we are. This is why we ask for the paper. This is why we ask to see stuff, because we want to keep stuff like this from happening. Okay, so she had a lot of expenses that were disallowed. And so the total between the tax and the penalties is just under $2.7 million. And so now, 9 times out of 10, when you go to tax court, the IRS is like 95% certain they're going to win. So I want to talk about the documentation piece. I'm going to get to where it's the list of stuff that they disallowed. Okay, so the qualified business income deduction, that comes from the Tax Cuts and Jobs Act of 2017. So basically, if your profit amount is reduced, your qualified business income deduction is going to be reduced. Yeah, it was really petty, this $14 of qualified business income deductions. Okay, so royalties on the return, there was $11 reported, $14.60 by exam. So basically, she had royalties. She only reported $11. The IRS had third-party reporting that said that number was different, so they made that adjustment. Other expenses, and it says, since you did not establish that the business expense shown on your return was paid or incurred during the taxable year, and that the expenses was ordinary and necessary to your business, we have disallowed the amount. So the other expenses, she showed $790,000 on the return, and on the exam, they showed she had $29,458. Okay, so what do you have to do to establish that a business expense was paid or incurred during the taxable year? Receipts, invoices. Those show your expenses. It is not going to be a line item on your credit card. An invoice is going to show a proper invoice. Let me be clear what a proper invoice is. A proper invoice is going to have the business name that provided the service, the date the service was provided, the service that was provided, the amount charged for the service provided, and when the payment is due. That is what a proper invoice will have. So it's just not some here's something on a piece of paper. I'm billing you $14,000, but you're not showing what it's for. That is what a proper invoice looks like. And a proper receipt is going to have the business name, the date, the items that you purchased, how much they were, and that you actually paid the receipt. So So understand, like when you go to the grocery store and you get that itemized receipt, that's what your receipts need to look like. This is why I tell you guys, your bank statement, credit card statement is not enough. You need to have these receipts and you need to have invoices. Even just a canceled check does not constitute documentation. It does not. If you have the canceled check along with a proper invoice, that is substantiation of that expense, not just a canceled check. Okay. So legal and professional services, she claimed $1.15 million on the return. By exam, they allowed $677,000, and it says the deduction has been adjusted to the amount verified. Okay. So legal and professional services, if you've got an attorney, if you are meeting with a CPA, whatever, there should be a receipt. There should be an invoice. There should be something, right? Contributions carry over. She had a charitable contribution carryover of $868,766. They allowed zero on exam. And it says, since you did not establish that the amounts shown were A, contributions, and B, paid, the amounts are not deductible. Okay, so let's talk about this carryover. And this is why it's important, again, for this documentation. So when you bust up with your tax professional and you've got, all these charitable contributions, if you donate to your church, for instance, you should get a statement showing how much you donated to your church. There is a statement that shows the year, that shows how much you paid. Even if you don't have that, if you have your list of if you paid by check or something, if you have those checks that you wrote and you can show that those checks cleared from that organization, that will help substantiate that payment. But if you don't have that, and even like when you go and y'all want to show all these things that you donated to Goodwill and all of this, and it's all these extra thousands of dollars, then you have to be able to show exactly what you donated, when you purchased it, how much it was worth when you got, how much you paid for it, and then what it was worth when you actually donated. You've got to have these receipts. And so basically they've said that, okay, you couldn't establish that you paid this $868,000 in charitable contributions. So they added her self-employment tax. Self-employment tax is on a Schedule C. Now, I'm not quite sure why Beyonce's got a Schedule C right now. I don't know. Because she's got all this other stuff going on. A Schedule C. And let me stop right here and talk about the Schedule C for a minute. Because a Schedule C is a sole prop single member LLC business that is added to your return. Now, the Schedule C is probably the most audited item on the tax return. Why? Because there's so much fraud. Okay? Just having a Schedule C does not mean that you are automatically going to get audited. No. However, that's where the most fraud takes place. Can anybody say PPP loan fraud? Okay? That is just a prime example. There's so much fraud on the Schedule C. So that's why like I said, I don't even understand why she has a Schedule C right now, but I digress. Okay, so she claimed other expenses on a Schedule E. We have disallowed the amount shown on your return because you did not furnish the information needed to support the claim deduction. Utilities disallowed because you did not furnish the information needed to support the deduction. Taxes, you did not provide the support. Now, if you have a rental property and you pay property taxes, you're going to get a 1098 just like you would if you had for your own house. So that part really should not have been that hard to prove if you paid property taxes. Okay. Whew, management fees. We have disallowed the amount shown on your return because you did not furnish information needed to support the claim deduction. Management fees. Who's managing? Is it if somebody is managing something for you, you are paying them to do it. Therefore, there must be an invoice, right? So if you have a rental property and you are paying a property manager, you should be having an invoice that's monthly that shows how much you're paying them. I don't care if you've got somebody managing your emotions. There should be a receipt. There should be an invoice that shows exactly what you paid for. Insurance. You did not establish the amount shown was an insurance expense and paid, so it's not deductible. Depreciation. It says, since you did not establish A, the cost or other basis of the assets, and B, that it is depreciable, no depreciation is allowed. Okay, cost basis, how much you paid for something. So if you have a piece of property that you are depreciating, so let's assume that I go out here and buy a tractor. I don't know why. Let's buy a tractor today. If I'm a farmer, right? Whatever. If I go buy a tractor, I have a receipt that shows how much I paid for said tractor. So that's going to be my original basis. I'm going to have something. And then that's going to be able to say how much I should be able to depreciate. Even if I got the depreciation wrong, okay, you could adjust for that, but you still have to have something that has what you paid for that item. If you paid for any type of asset, you got to have, who walks away without some sort of receipt, loan document, something, okay? And then, and the same for another on the Schedule E. Depreciation expense of $3 million, $3.3 million. You mean to tell me if you claim a depreciation expense of $3.3 million that you have a problem providing substantiation for something that $3 million? Come on. So when you think about, when you go to your tax pro and they start asking you these questions, this is why. Because when you end up in tax court, or if you get audited, you need to be able to provide the substantiation. If you can't provide said substantiation, then they are going to disallow the expense. And it is not just providing the documentation. Is it also ordinary and necessary? So while y'all all going out here buying these G-Wagons because somebody said, hey, if you get your LLC, you could go out here and buy this G-Wagon and the IRS is going to pay you for it. If you get audited, the question is it ordinary and necessary? And if you can't prove that, then that expense will get disallowed. Like, I don't care what any of these influencers say, okay? I do not care. If you can't provide that this is an ordinary and necessary expense for your business, then that gets disallowed. Because there's the court case, and why the court case escapes me right now, sorry. But it establishes that deductions are a matter of legislative grace. That means you are at the whim of the IRS. You, as the taxpayer, have to be able to prove that you are entitled to said deduction. If you can't prove that, then they have the right to disallow that deduction, that expense, or anything related to that. And that's just the law. That's just tax law. So, once I figure out this Schedule C thing, y'all, I really need to know what this Schedule C thing is about. Because if you've got that much in other expenses, like, how much revenue did you have? I don't understand. Like, how much listen, y'all, between the other expenses and the legal and professional expenses, that was like $1.3 million. Okay, so how much money did you have to make? And that's on a Schedule C? That's an absolute no. So yeah, you guys, I'm definitely going to be watching this. The entire tax community is going to be watching this, because there's just some unbelievable stuff in here, right? Like, based on why these expenses got disallowed, this shouldn't even be in tax court, because this is about providing documentation, providing the paper that legitimizes these expenses. This is about paper. So that's why I said, I hope this case really helps you understand, as tax professionals, why we're always asking for the documentation, because we don't know if you're going to get audited. We will never be able to tell you if you will, or if you won't get audited. Only thing we can do is tell you how to prepare. And if you prepare your return like you knew the IRS was going to show up tomorrow, you will be fine. This is why your tax professional says, hey, if you don't have the documentation on this, I'm not putting it on this return. Because listen, the CPAs that prepared her return is about to be real famous right now. Right? Because it's like, why is this here? This should not be happening. This is what I'm saying. This is not some huge corporate we have a disagreement about the interpretation of the law. This is just about being able to provide documentation for expenses. So listen, I hope this serves as a lesson. And if you're a tax professional, when your clients start pushing back on this documentation thing, you can now introduce them to Beyonce's tax court petition, because it's been disallowed. And so now the next steps is, this is going to go to court. And a lot of times, even after a tax court petition is filed, it can still get settled on appeals, right? So this could actually not even make it to a judge if they get it straightened out in appeals. But because that tax court petition was filed, it tells me that that there's something wrong here. Like, Beyonce done paid these people way too much money for her to be getting expenses and deductions disallowed because of a paperwork issue. That doesn't make any sense. But the other thing I also want to note on here is these carryover contributions. So when you have any type of carryover, you have to make sure it's documented from year to year, right? So for instance, I have a client that has, like $100,000 of charitable contribution carryover, but you got to know that the carryover started in 2018. So you have to be able to prove that, hey, if this carryover started in 2018, we need to be able to see where you paid this charitable contribution in 2018 in order for you to carry that forward year to year until it's used. So understand that, just having carryover, that sounds really nice. And especially if you're getting a new client that has this carryover, you need to be asking the questions. Hey, what year is this coming from? Do you have this tax return? Do you have the documentation that goes with this tax return? Because if you don't, then you don't need to be carrying nothing over. Don't do anything that you can't prove. Okay, what's that Denzel say? It ain't what you know, is what you can prove. This is about proving. So I am floored. I am really floored that she is going to court of having to even go through this process over some documentation. So I hope this turns out to be a lesson. Okay. So I'll add the link so that you can actually read it for yourself. But yes, we shall be watching because that's what us tax nerds do. Okay, thank you guys so much. We'll talk soon. Bye.